I'm often asked when you head into a period of dislocation like this, can you still produce high returns? And I would say absolutely. I think we're at an interesting inflection point for the economy. The cumulative impact of the Fed's rapid hike of interest rates, I think that is starting to flow into the economy, which has been remarkably resilient to date. We don't expect this is anything like 08, 09. We don't have those kinds of imbalances, but I do think it's reasonable to assume we'll see a bit of an economic slowdown as we move into 2024. When you look at commercial real estate over time, supply and demand really matters. And what you're seeing, because rates have gone up so much, is the supply of new commercial real estate starts is down 30 to 70% in the third quarter. And that sets the groundwork for a recovery over time. We've been really intentional about where we deploy capital into faster growing sectors like logistics, student housing, data centers. And as an investor who wants to take a longer term view in a longer term asset class, we think there could be some real opportunities in real estate, particularly given the dislocation that exists today. There are a lot of concerns around private credit because the asset class has grown quite a bit over the last few years. But when I think about risk factors, defaults, and loan to values, when I look at spreads, they indicate a market that is healthy and where the rates of return you can generate by lending money are really attractive relative to the risk. So in private equity, the way we're trying to navigate this environment is by looking for businesses that can power through an economy that may be slowing. They're in sectors that have better long-term tailwinds. What's happening in the energy transition? What's happening in AI and digital infrastructure? What's happening in certain countries like India, which are benefiting from some powerful long-term trends? Look for where the puck is going, lean into those sectors, and as a result, produce outsized returns. When the markets pull back, when there's dislocation, it's at moments like these where we tend to make some of our very best investments.